Hi, here's how I earn high interest by putting money in the bank. I basically make use of the high interest that digital banks offer. If you're wondering what a digital bank is and how it differs from traditional banking or online banking, then the main difference there is that traditional banks have physical locations where you can find their branches or their ATMs, while digital banks are, for the most part, completely online. From setup to fund transfers, you won't be finding any physical branch locations of digital banks or of purely digital banks. And how that differs from online banking is that online banking is basically taking a traditional bank account and enrolling it for online services, such as being able to see your balance through the bank's app or website, or being able to transfer funds online, or being able to pay for your bills online. To give you a picture of how the interest differs from traditional banks and digital banks, here is my balance in BDO, taking into account the 20% mandatory tax. And here is my balance for CIMB, again, taking account for the 20% mandatory withholding tax.
I currently earn a few hundreds per month just by depositing, subjected to withholding tax, and that interest constantly compounds, so my interest earned also earns interest.
Now you're probably wondering, is this safe? Short answer is yes, it is safe. Just like traditional or universal banks that we have, such as BDO, BPI, RCBC, and so on, there are digital banks like CIMB, Como, and ING that are PDIC insured. What that basically means is that the Philippine Deposit Insurance Corporation has all of your deposits insured for a maximum of 500,000 pesos. So in the highly unlikely event that a bank has to shut down or file for bankruptcy, you can at least be assured to get your money back up to the total of 500,000 pesos. Okay, so now that we got that out of the way, you're probably wondering, bakit pa kailangan magkaroon ng account sa digital bank na yan? Ano naman kung mataas yung interest? And this, my friends, is where capital preservation comes in. I've discussed this briefly in my first video, which basically laid out the whole foundation on how I manage my money and how I grew from saving my first 1,000 pesos to my first 10,000 pesos to my first 100,000. And it will also be the system that I'm going to use when I grow or when I save my first million. But basically, why you're going to want to have an account is because there's this thing called the time value of money. And as time goes on, the value of money decreases. And that's basically what inflation is. So 20 pesos in 1997 is more in value than 20 pesos in 2021. And how do we judge that? Well, in 1997, you could buy more things with your 20 pesos than you can do now in 2021. In fact, it's not even enough for a tricycle ride anymore these days. So what exactly is the role that digital banks play in helping to preserve your capital? Well, on the average, the inflation rate in the Philippines is 3% per annum. The interest that digital banks offer is around 2.5% to 4% per annum, which means you earn enough to cover the depreciating value of money by the year end.
If you're wondering why digital banks can offer higher interest rates versus traditional banks, it is because digital banks do not have to pay as high of an overhead cost as traditional banks do. Since digital banks operate mostly online, they won't have to pay rent for their branch locations, they wouldn't have to pay for on-site employees or the electricity to cover the air conditioning for their buildings, and so on. That's why digital banks can afford to give higher interest rates than traditional banks.
When it comes to personal finance, it isn't just enough to find ways to make more money, but also you're going to have to take steps to make sure that whatever money that you have made preserves its value. This can also be done through investments that are guaranteed to grow your money enough to cover for inflation.
And more.
However, that approach isn't as liquid as traditional banking. It requires a lot of or isn't as readily withdrawable as putting money in a digital bank, where in the event of an emergency, you have funds that you can rely on. So, which digital bank did I opt to use? Well, I opted to use the CIMB GSave, and this is integrated into the GCash app. Why I decided to go for this is because I was already familiar with the platform. I was already familiar with using GCash, and so I went ahead and decided to give it a go. In my opinion, this is also a beginner-friendly option, especially when you're just trying to get your feet wet when it comes to digital banking, because GCash doesn't need you to open a bank account for you to get started. It's basically like your e-wallet, and you can directly cash in through your GCash, and from your GCash, you deposit it into your CIMB. Now contrast that to ING, which is also a very much viable option, where you're going to need an existing bank account in order for you to transfer funds into your ING account, or you're going to need to write a check in order to transfer funds into your ING account. So now that we got that out of the way, here's how I opened my CIMB GSave. Now, something to keep in mind here is that you won't be able to open your CIMB GSave if you already have an existing CIMB account, like a CIMB Fast account or CIMB UpSave. So the best course of action here would be to first open your CIMB GSave through the GCash app.
You will need to open the Save Money option on GCash as shown earlier, and you'll be guided through the process. Here's a guide on how to open a GSave account directly from the CIMB website. If you don't link your GSave to CIMB directly, your account will expire within a year, so here's a visual guide on how to do the linking process.
And from there, you go through the proper steps and processes and supply the information that they're going to need. Download the CIMB app, and in less than 15 minutes, you've got yourself a CIMB digital bank account. So how do we withdraw? You can withdraw by putting a withdrawal request through the app, and then from there, taking the filled up forms or documentations to the Bayad Center, or you can withdraw using the CIMB debit card. Before, it used to be free to withdraw from any BankNet participating ATM, but now banks are starting to charge fees, so that will differ depending on which bank's ATM you decide to use. And how do I get the debit card? In my experience, I had to have a cumulative deposit of 5,000 pesos from either your UpSave Fast account or GSave, which all falls under your account. Then you're going to find that the option to avail for the debit card is available. From there, you put in your delivery details, and they're going to deliver your card right to your address free of charge. Once you have your card, you have to go through the steps of activating it, which can be done through the app. And now you've got yourself a digital bank account with a working debit card. Digital banks are the way that I prefer storing my emergency funds, because my emergency funds tend to be the funds that I'm not using immediately. And I would like to make sure that when the time comes that I need it, at least I know that its time value has not significantly decreased. I hope you found this insightful, and if you did, feel free to like and share it. Till next time. Oh my, why do I have to keep refilming things?